Namaskar. Today, I, Ritu Singh Sharma, ADG, Directorate of Public Relations, Publications and Publicity, CBDT, New Delhi, welcome you to yet another episode in this special Samvaad series on the new income tax forms. Committed to enhancing the ease of compliance for taxpayers and streamlining processes, the Income Tax Department has introduced, as part of this endeavour, new and simplified forms under the Income Tax Rules 2026, which would be operative from 1st of April 2026. The simplified forms will benefit all stakeholders and will help in fostering a more efficient and compliant tax ecosystem. Though all forms have undergone the above mentioned changes, for the purpose of this taxpayer information series, we have taken key forms that have been found to either most frequently used forms or the forms which have undergone business process reengineering. In this episode, we shall be discussing two forms. One which is required to be filed by those stakeholders who do not possess a PAN to enable them to undertake those transactions which otherwise require quoting of PAN. And second form which is to be filed by the reporting entities for the purpose of reporting of such declarations received by them. To explain the changes that have been made in these forms, we have here with us today Shri Anurag Sharma, IRS, presently posted as Commissioner of Income Tax, being OSD Investigation, CBDT, Delhi. I warmly welcome you.
Thank you.
Sir is an officer of Indian Revenue Service of the 2005 batch, having experience of more than 21 years across many verticals. Sir was also core member of the drafting committee of the Income Tax Rules and Forms 2026. He was also instrumental in drafting of these new forms and has added his 21 years of experience in simplifying these forms for the ease of all stakeholders. Namaskar, Anurag ji. Thank you for joining us today in this session on declarations filed by the stakeholders while entering into any of the specified transactions without having PAN, and the forms for reporting of such transactions. It is indeed an honor and pleasure to have you in our studio today. Thank you so much.
Thank you.
To begin with, the Income Tax Department has introduced simplified tax forms under the Income Tax Rules 2026. Could you please explain our viewers the objective behind this?
Certainly, Rituji. The simplified forms, which are to be made effective from 1st April 2026, they aim to enhance the ease of compliance as well as transparency. These forms use simpler language, standardized and to the extent feasible pre-filled formats and technology-driven processes to minimize errors, reduce disputes and make compliance easier for all the stakeholders.
That's very nice. Though all forms under Income Tax Rules 2026 are important, as they have undergone the similar transformation as has been quoted by you. But as part of this taxpayer information series, we have selected these two forms. Can you briefly explain our viewers why these forms have been selected?
Absolutely. As part of simplification exercise, it was decided to undertake the process engineering for certain forms which are submitted to the Income Tax Department in large numbers. In the current framework, around 12.5 crore non-PAN declarations in Form 60 are filed annually, and that too every time a prescribed transaction is undertaken by any person who does not possess a PAN. With changes in regulatory and statutory framework, actually this prescription of Form 60 was given in the Finance Act and the corresponding rules in 1998. So, with changes in the regulatory and statutory framework, it was found that large portion of the data which we are capturing through Form 60 was actually already being collected otherwise through other statutes. There was transaction wise filing which was found to be inefficient. There was duplication of effort that was noted, and accordingly, with an aim to reduce compliance for all the stakeholders in line with this existing regulatory practice, and of course to facilitate the path of Viksit Bharat 2047, substantial re-engineering was carried out in Form 60. With this new framework, we expect that the filing would be reduced by at least 80 to 85%, thereby easing the compliance for the declarants. Similarly, Since the filing of lesser number of non-PAN declarations would be there, the reporting entities will also be required to file lesser number of declarations as part of their submission of the statement of declaration, which will reduce their own compliance as well. In view of these substantial benefits which we envisaged as a result of engineering, these two forms were picked up for the exercise.
So that is indeed a very noteworthy step, because as you have mentioned, it would be benefiting nearly 10 crore taxpayers, which is really a big step, as you have said, towards easing compliance for the taxpayers, and as you have mentioned, for the reporting entities also.
Yes.
Because that would be equivalent reduction in the number of forms for them.
Wonderful. Yes, absolutely.
Yeah, that's so nice. Could you please further explain our viewers what is the purpose of filing these forms?
Yes, certainly. The first form, which is the current Form 60, is actually a declaration which is required to be filed by a person who does not possess a PAN but wants to enter into certain transactions which are specified in the Income Tax Rules 2026. For these transactions, quoting of PAN is otherwise mandatory. So, filing of these forms, what does it do? It allows those persons who otherwise do not possess a PAN to undertake these transactions without quoting such PAN. The next form, which is currently Form 61, is actually a statement which is required to be filed by the reporting entities. So, once Form 60 is filed by the declarant, it is processed by the reporting entities to whom the file has been submitted. This form contains the details of all the non-PAN declarations received by such entity during the specified reporting period.
So, Anuragji, can you please explain that whether all prescribed transactions which mandate quoting of PAN be undertaken by a person who does not possess a PAN by filing the non-PAN declaration?
Oh, I am so glad that you have asked this question. This is a very important change that we have brought about in this current framework. So, under the existing Form 60 framework, all the transactions which required quoting of PAN could be undertaken by any person not possessing a PAN by filing the non-form PAN declaration in Form 60. However, in the current framework, we have removed the facility for undertaking the transactions without quoting a PAN for large number of transactions. Only for a limited number of transactions, we have allowed that by filing Form 60, you can undertake the transactions. Therefore, for undertaking those other prescribed transactions, holding and quoting of PAN is mandatory. Such transactions now cannot be undertaken by filing a non-PAN declaration form. Some of these transactions in which the PAN has been made mandatory are application for a new credit card, opening up of a demat account, purchase of mutual funds, cash deposit and withdrawal in excess of rupees 10 lakhs in a year, etc.
So, but in such a case, how will a person who does not have a PAN undertake these transactions?
Oh yes, in case any person wish to undertake these transactions but does not possess a PAN, he would need to necessarily obtain a PAN by filing relevant application, and only after a PAN is available, the transaction can be undertaken. If you do not have a PAN, you will not be able to undertake those transactions.
Okay, so that is a good deterrent.
Yeah, it is.
Okay. So, that brings me to my next question. Whether all persons are required to file non-PAN declaration for undertaking the prescribed transactions?
No, Rituji. This is again a very pertinent question. There are certain class of persons who are not required to even quote PAN for those transactions for which other persons are required to quote the PAN while they are undertaking those transactions.
Okay.
Therefore, since they are not required to quote any PAN, there is no requirement for them to file a non-PAN declaration. These are the central government offices, state government offices and councillor offices while they are undertaking any of the prescribed transaction. While for certain transactions, the non-residents are also not required to file Form 60.
Okay, that's great. That's a good benefit to even non-resident taxpayer also. So that brings me to my next question. Could you explain the periodicity and due date for filing of these forms?
Certainly, Rituji. The non-PAN declaration are event-based declarations. That is, whenever a person is undertaking the transaction, then the declarant has to file the form with respect to the transaction, and that the form is to be filed to the entities with which they are undertaking the transaction or through which they are undertaking the transaction. However, the entity who receives such non-PAN declaration, they are required to file the report in form 61, erstwhile form 61, but that declaration is to be filed twice a year. That is, whatever declarations that entity has received from 1st April to 30th September, that is to be filed by 31st of October, and the declarations received from 1st of October to 31st of March, that entity is required to file the details of those declarations by 30th April of the next financial year.
Okay. Anurag, can you please further explain our viewers as to what is the structure of these new forms, whether some change has been also brought out in the structure of the forms?
Yes. In fact, there is a absolutely vast change in the structure of the forms that we have brought out this time.
Okay.
We have made the non-PAN declaration modular so that the relevant details and capture of only such information which is relevant to the transaction being undertaken is captured separately. So, the form which has been prescribed now consists of 6 parts. Part A, which captures the details of the transaction which is being undertaken. Part B is a non-PAN declaration in which the person who is filling up the form declares that he does not possess his PAN. Part C are the details with respect to the identity and address of the declarant. Part D contains the details of the transaction which is being undertaken. Part E contains the documents which are submitted as proof with respect to the identity and address details which he has submitted in Part C.
Okay.
And Part F is the verification which prescribes that whatever information the declarant has submitted in other parts is correct to the best of his knowledge. At the same time, the form which is required for submitting the statement of declarations received by the reporting entity, that is the erstwhile form 61, it has now 2 parts. Part A, which provides the details of the reporting entity, the statement details and the details of the principal officer of the entity which is submitting the declaration, and Part B, which contains the details of the declarant, the transaction which was undertaken and the document submitted by the declaration as part of the form 60 non-PAN declaration.
That is so wonderful. That is perfectly in line with the vision of the Government of India, that the compliance has to be made easier for the taxpayers. So, by structuring the form into different parts, the taxpayer only needs to fill the relevant part. So, he need not go through all the parts for every transaction.
Absolutely. So that has been the basic theme with which we have tried to restructure all the forms and the corresponding rules.
Okay, that's very nice. Can you just further elaborate as to what are the documents that are required by the taxpayers before filling of these forms?
So, in respect of the non-PAN declaration form, as I mentioned, they are supposed to provide the details of their identity. With identity, it is meant that their name, their date of birth and other details as well as address. So, these details are to be substantiated by providing those supporting documents while filling up the form 60. So, the details of the permitted documents for this purpose are part of the form 60 itself. At the same time, the entity which is collecting this non-PAN declaration is required to verify these documents and these details and satisfy itself with the correctness of information. Only then that reporting entity is expected to accept the declaration. Now, the reporting entities, after getting those documents, are not supposed to upload those documents. They are only required to report those details in the erstwhile form 61, corresponding to which the new form has been framed.
Okay, that is indeed very nice. Can you just to recapitulate, can you just explain our viewers that what are the key features of the new forms in nutshell and how these new features are going to benefit the stakeholders?
Certainly, Rituji. The simplified forms, although have several benefits for the declarants as well as the reporting entities, I would just like to share few key benefits. So, what we found out was that the number of transactions for which the non-PAN declaration was being captured included certain transactions for which the framework itself has now become non-applicable. Say for example, there were certain transactions for which the payment in cash for the purchase of bank drafts, transactions in which there were payment in cash for purchase of prepaid instruments. The form 60 was required to be filed if the payment is in excess of rupees 50,000. Now, the relevant guidelines by RBI now have clearly mandated that any transaction, if it is to be undertaken in excess of 50,000, it has to be done through bank account only. There cannot be any transaction in cash in excess of rupees 50,000. So, these kind of transactions are the ones for which the framework is no longer applicable. So, we removed these transactions.
Okay.
Now, as I also discussed earlier, the PAN has now been made mandatory for large number of transactions. So, of course, for these kind of transactions, the new form corresponding to form 60 is not required to be filed. As a result, now the declaration of non-PAN in the new form corresponding to form 60 is limited only to 6 types of transactions. Now, what we also found was that in case of certain transactions, there was no need for repeated filing of form 60. For example, in case of deposit of cash in excess of 50,000 in a bank account, every time a declarant was depositing the cash, he was supposed to declare and file form 60. Now, at the same time, we are tracking the cash deposits in the bank account in excess of rupees 10 lakhs every year through the SFT, that is Specified Financial Transaction Framework. So, if you are already capturing the details of cash deposits in excess of 10 lakh rupees, there is no need for us to ask the declarant to file the form 60 every time a cash deposit of 50,000 is being made. So, we identified those transactions and made the changes in the SFT framework as well as form 60 accordingly. So, that for those transactions also large amount of filings would not be required. We also, as I mentioned, the supporting documents have been mandatorily required to be filed, the details are required to be filed, so that we have better data quality, we have better data transparency and authenticity.
That is indeed a very perfect recapitulation of the entire key features of these two new forms, and that is in fact a great insight for me too, that now form 60 is required, the new form would be required only for 6 type of transactions. And what was the earlier, sir, if you can explain to our viewers?
Yes, Rituji. So, earlier there were 18 different types of transactions for which form 60 could have been filed in case the declarant did not possess a PAN. Now, as I mentioned, out of those 18 transactions, there are certain transactions for which we have mandated the quoting of PAN and form 60 filing has not been allowed. So, there are only 6 transactions which are now left, and as I mentioned, there are certain transactions which have been taken out from the form 60 framework itself. So, in nutshell, currently there are 6 transactions on which form 60 will be filed, and as a result of that only, the large number of form 60 filings to the tune of 12.5 crores would now be reduced to, we are expecting that it will be not more than 1.5 crore at the max.
That is such a huge benefit for our stakeholders. That was my last question. Thank you so much, Anurag ji, for joining us today in this special Samvaad series on new simplified tax forms. You have explained in a very lucid way not only the logic behind simplification of these very important forms, but you have also explained the key features of these new forms and as to how these new features would be benefiting all stakeholders. The expected reduction in filing from nearly 12.5 crores annual filing to approximately 1.5 to 2 crores will indeed benefit all stakeholders and will ease the compliance for them, and in turn it will benefit the entire tax ecosystem. Our viewers are really thankful to you for taking time out of your very busy schedule and for enlightening them on these very important forms. Thank you so much once again.
Thank you, Rituji, for having me on this Samvaad session. Thank you.
Thank you so much to our viewers for viewing this session, and I really hope that you will benefit from this session. Thank you so much.